Hello everyone, today is the 4th of January 2023. Trading is closed. Let's start with our disclaimer and then go over our calls. It's my trading plan for Thursday, January 5th. Please remember I can be wrong. Any trade should be made at your own risk. Look for the pattern today with the early low, which is this. Tomorrow should also have the early low. I really couldn't come up with a directional call for today, and with wild swings like this, I'm not embarrassed about it. It's pretty tough for me to come up with something with wild swings like this, but I think I came up with something today. Before I do that, let's just notice how these old FOMC announcement prices tend to offer support or resistance. And let's notice that despite gapping up 2 days in a row, we're still closing under all these highs. As far as I'm concerned, that's a rejection of the break to new highs. During the day, MEJT said ultimately higher price would print. We didn't have to go up this fast. We didn't have to go up this much, but we did. In the afternoon, MEJT said this move was false, so it would retrace, and it did. Now it says this drop is false, will retrace, gives us the target of 38.5725. That'll have to be my call unless we gap down smartly, and that's not impossible because this is a wall into the close, and these things often will gap down smartly. Now the target's just up here at this line. Shouldn't take all that much to hit it, but let's remember, with just under 15 minutes left to trade, despite gapping up and hitting a new high, we couldn't hold on to any of these highs. It's not a bullish pattern. These lines are old TDST lines from Tom DeMark, even though they're from patterns which in his work have expired a long time ago. I still keep track of them. You'll notice how this line was support, and finally it broke. Now this line's resistance, I'm not so sure it's going to break. Well, I had this count in gray as my old count, and I just couldn't make it work. I tried 3 wave patterns, 5 wave patterns. None of them made me happy. When I moved one over to here, I was able to make it work. Doesn't mean it's the right count, but at least I have a count that works. That would be we've completed an ABC for A, and now we've completed B. Now I don't know if that's the right count, but if it is the right count, A was about 300 points plus, and if we have completed B, and we drop as much, we could be in the 3,500s pretty fast. There are other targets too. Let's focus in on that and see why it works. Well, here's how I count from the October 13th low. Got 5 waves up for 1, 2, 3, 4, 5. The fibs work. You have an ABC for A, and today we completed an ABC pattern with C equal to A. Doesn't make it the only count. This could be just A or B, you don't know. But if we break under these lows, which hasn't happened yet, but if we do break under these lows, it could be wave black C, and it could be pretty ugly. But if it is pretty ugly, and if I'm right about this being the end of the bear market, then it would be a great opportunity to go long, because that low is this low right here. Thursday's pattern has the early low. It could still gap up. There's a slightly higher target. Let's we gap down smartly. The rules call for it to print. The NASDAQ McClellan oscillator is well over its upper Bollinger Band if you reverse back through it, which hasn't happened yet. but if you do, it gives a sell signal. The Santa Claus rally was a no-show. There's resistance from an old TDST line which is held. Yesterday's high was a perfect target of someone else's system, and that's also held. We have a wall into the close. Often this leads to a gap down. My preferred wave count is compatible with a big drop starting right from here. So if, and that's an if, we break under the lows of the current consolidation, should be a long way down. Bulls need to stage a rally which sticks, and to do it soon, and so far during one of the most bullish times of the year, they haven't been able to do it. We said at the end of last year, my usual expectation for the first week of the year is for the first 1 to 2 days to move in one direction and then have it reversed by the end of the first 5 days of trading. We really haven't moved that much, even though we are higher. And I'm not going to claim it works every time, but it works often enough. And if it works here, we should be outside this range within 3 days of trading, with a good chance we undercut this low and have a big drop, which could well be the final drop before a big rally starts. And that's today's call.